Hello, federal employees. This is Sierra with Plan Your Federal Retirement. Thank you for joining me on today's Fall Friday, where I will be covering the highlights and action items from this week's episode. In episode 83, Micah and our returning special guest, Jamie Schlansky, discussed Dual Fed's FEHB rules. Jamie shared an experience where a client asked if they could talk to Jamie about their FIB. Now, this kind of confused Jamie because she thought maybe they're talking about a lie, but she clarified with the client and they were actually meaning FEHB. So Jamie always recommends that since there's so many acronyms in the federal community, to always say the whole entire thing so that you can ensure that you are on the same page with anyone that you're speaking with. So today we're going to be talking about Federal Employee Health Benefits, FEHB. Micah kicks us off discussing how Federal Employee Health Benefits, FEHB, is one of the best federal employee benefits because not only is it amazing coverage, but you also get to keep your health insurance into retirement. Jamie explains that within our office, we use the term dual feds, which means you have a married couple and both of the spouses are federal employees. Micah commented that this is also sometimes referred to as tandem federal employees. Jamie gets a lot of questions from her pre-federal employee retirees with questions about federal employee health benefits, FEHB. Sometimes dual feds are not going to retire at the same time for several different reasons. One of her clients, for example, was going to switch to an individual plan pre-retirement during the open enrollment season in November. They had already been on a family plan, but they wanted to keep their health insurance into retirement. Jamie wanted to talk about the Federal Employee Health Benefits, FEHB, because there's a lot of misunderstanding about the rules in order to keep FEHB into retirement. Micah delineates that each federal employee is going to be vested for retirement in their own right. You have to be in federal service, retiring with the eligibility of immediate retirement, and you have to be in Federal Employee Health Benefits, FEHB, for 5 years prior to retirement in order to keep FEHB into retirement. You do not have to be the primary person in FEHB. You just have to be in FEHB, even if you're on your spouse's FEHB plan. Micah goes into the perspective of why the client wanted to move to a single healthcare plan if there's still a need for a family plan because they have children. There are individual plans, self plans plus one, which are cheaper than having an individual plan plus a family plan. Micah explains that now you would have an individual plan premium, plus your spouse will still have to pay for a family plan premium, which brings up the cost dramatically. Micah brings up a great point that in retirement, you are now paying after-tax dollars and you are no longer getting a tax deduction for this. Jamie also states that now you have 2 different deductibles to meet now as well. Jamie brings up a client that wanted to know how the Office of Personnel Management, OPM, would know that the pre-retiree is on their spouse's FEHB plan when they file their retirement application. Micah answers that it is on their immediate retirement application, which is Form SF3107 in Section E. Micah and Jamie both emphasize that it is crucial for question 1, are you eligible to continue federal employee health benefits coverage as a retiree? That you always mark yes, even if you think that you might not be eligible. Let's let Office of Personnel Management, OPM, figure out and decide if you are or not. The second step is that your agency has to provide evidence that you were covered for those 5 years. If your agency doesn't have it because you are not the primary FEHB holder, that means your HR will reach out to the agency of your spouse and they can get the form from there. It is really important that you get a copy in your personal possession of this form from the Office of Personnel Management, OPM. This is something that we double check with our clients and help mitigate any concerns or any reason that you may lose your Federal Employee Health Benefits, FEHB, in retirement. Micah switches the gears a little bit to talk about a federal employee and their non-federal employee spouse. There are 2 rules for non-federal employee spouses. 1, they must be on as their survivor benefit. If you leave no survivor benefit, then your health insurance dies when you do. The second requirement is that the spouse has to be in FEHB, Federal Employee Health Benefits, before you die, the federal employee dies. Jamie talks about how she uses the term disinheriting when she discusses this with her clients, because you are making an irrevocable decision where once you die, the spouse is left with repercussions and loss of the potential benefit. The surviving spouse may not be able to continue on with work due to grief, and then they may lose their health insurance benefit. Jamie asks, if retirement doesn't go as planned, then what's going to happen? Now, this podcast is all about action items for our listeners. 1, this week, Jamie wants you to have planned out different scenarios. First scenario is everything goes as planned. What's going to happen? The second scenario is if one of the spouses dies, then what's going to happen? And the third scenario is if the other spouse dies, then what happens? Micah, action item 2, wants you to go to your calendar now and put on your calendars on November 20th to review your health insurance. Take another health insurance plan and compare them against each other, and then make an educated and informed decision on whether or not to stay on your current healthcare plan. Third, re-listen to the original episode 83 to hear the amazing conversation between Micah and Jamie. And 4, share this podcast with a friend, and with your help, we can achieve our goal of helping 1 million federal employees just like you. Until next time, happy planning!